Hi guys. Have you ever entered the trade and the market starts consolidating as soon as you enter and then goes and hits your SL? Yeah, this is a very common problem. And here, the main problem is not your strategy or not your entry. The main problem is that you are not checking the volume. Now, what is volume and everything about volume in the simplest term you'll find in this video. Starting with what is volume? Definitions. If you go according to definition, total shares or contracts traded over a period of time. And it incites reversal strength, strong interest, lack of interest. These three things, reversal strength, strong interest, and lack of interest. These three things can be known by the volume indicator. Now, how to set volume indicator? This is a this is a trading view page. You just go to the indicator section, type volume, and it just starts displaying volume. Now you see, this is what volume is. Now, why do traders generally use volume? Why do profitable traders generally use volume? Any type of strategy, let it be continuation, breakout, trend lines, support, resistance, most of the strategies, key secret to this is this volume indicator down here. It spots a potential shift in trend direction, confirms breakout and continuation patterns. So what volume does here is, you see few volumes like these candles are much bigger than compared to the rest of the candles. This means that here the amount of money in the markets, either in buy or sell direction, is more. Now let's see how volume is important across different strategies. So let's check in continuation strategies. Traders generally use volume in different strategies. Like, few traders do breakout strategy, few traders do continuation strategy, few traders trade based on reversal strategies. So this volume is important for all of these traders, and it is generally called as a universal indicator. It is called as the universal indicator because it is crucial for most of the trading strategies. Now I'll explain you how is it crucial for different strategies. Now for a perfect breakout entry with volume, let's see this chart. This is an Nvidia chart where you can see there is a support and resistance, and market was consolidating here. Now what breakout traders generally trade based on? Breakout traders trade based on breakout of their zones, either in lower support or either in resistance. Here you see a breakout in resistance, but you should not directly enter just looking at this candle. What if market after this giving this breakout candle, it starts consolidating again and it just increases its zone width to this much? Then it's gonna cause you to hit your SL. Then you should check the volume. When you see a breakout along with a volume spike, that is a perfect A plus setup where you put your SL below the support and aiming for 1:2 to 1:3 risk reward according to your need. This is how breakout traders generally use volume in their favor. Now you can see price moves outside the support or resistance accompanied by significant volume surge. Strong buying or selling pressure, high volume makes breakout more reliable. You cannot just depend on this one candle, so high volume makes it more reliable. Now second thing, perfect reversal entries with volume. Now you see here, few people trade based on inverted hammer like candles. Inverted hammer, this thing is a good sign that after a downtrend the market is gonna reverse. After major downtrend, if you see inverted hammer, it is a good sign that the market is gonna reverse. If you want more such confirmation candles, check out the previous video in my YouTube channel, you'll find it. So after the downtrend, you're gonna see this candle, but you can't just enter based on one candle because it can go wrong sometimes. You want a strong confirmation, so check the volume. There is a good buyer's side volume spike here and this candle confirmation. After these two confirmations, now you can clearly enter, placing stop loss below the candle's lower wick and aiming for 1:2 to 1:3 risk reward easily. Now, change in direction of a price trend. Confirmation, strong bullish or bearish candle with volume spike. Indication is new buying or selling interest is being generated in the market. You can see here there was less volume, less buying and selling pressure, and suddenly you see good buying pressure here. And after that, pattern. People, not only this candle, people generally use trade based on double top, double bottom patterns. They also use volume indicators because it helps them a lot in their strategy. If you don't know what double top and double bottom is, I already uploaded a video, you can check that out as well. Now, perfect for continuation entries. Few people trade patterns, chart patterns, like this is a flag and a pole pattern. You see here, this was a strong pole, a strong bullish uptrend with a high volume. Next, during the flag period, you see market starts consolidating between the support and resistance. It was consolidating, and during this period, check out the volume also. Volume also was very less. Next, you see a good breakout. After a good breakout, you see a very good volume spike. Again starts a good bullish trend. So traders generally enter near the breakout with a confirmation of the volume, placing their stop loss below the support region and aiming for a 1:2 to 1:3 risk reward according to their risk management strategy. So here we can see definition. Existing trend resume after a pause. Here markets were consolidating, volume was very less. So after this pause, a trend started. The trend gave a confirmation as well, volume. Next, consolidation. Volume typically decreases during this phase. And next was breakout. Price breaks out and gives a new volume sudden spike surge, which you can check out here, and you can place your trades according to that. Not only the flag pattern, different patterns like bull flag, triangles, pennants. You have many different patterns here which you can use. Now uptrend and a downtrend. Traders generally, beginner traders, what they do is they start trading based on the trend. You see this is a bullish uptrend creating higher high and higher low. It is going up. Now what they do, they generally enter a trade based on the trend. So according to this, they could have entered here, they could have entered here, and they could have entered here as well. But what if this was the last higher low and market is going down from here? So you need a very strong confirmation. So we again apply volume indicator here. We see here volume was high. There was very big volume in this zone. So it was a very good uptrend. So you could have placed your trade here. But you see with time the volume is decreasing. Now in decreasing volume and you are still in your long position buying. So it is a decreasing volume is a strong sign of reversal. After here the market is going to reverse. This is giving a strong sign. So you cannot trade based on trend here. Price makes higher high, but volume declines. Indicates lack of buyers. Increased probability of trend change. Be aware of new long positions. Consider taking profits. If you have already entered in some of the high, start booking your profit when you see volume has decreased a lot. Or if you are in starting phases and you see volume is spike and volume is increasing and market also is going up, then it is a good sign for you to enter. And basic points of volume, how to apply volume, I already taught you. Change in volume can foreshadow price moves. Price moves are more significant with high volume. Low volume generally causes a small consolidation, but high volume, like if you look at here, high volume causes a trend. Price and volume moving in opposite directions, trend changes. If the price is going upwards but the volume is going downwards, then this is a sign of trend reversal. So this was all about volume in a very simple and basic way. If you like such content, make sure to subscribe, and if you want to watch any other video, make sure to let me know in the comments. If you have any sorts of doubt, you can comment or even text me on the Instagram. My link is in the description. Thank you.